The Depository Trust Clearing Corporation clears about $3 to $4 quadrillion a year. It is the U.S. infrastructure when you sell stocks and bonds in the market. They handle the clearing of that. They also have about $100 trillion worth of assets that they're going to be tokenizing starting here in 2026. We're starting to get a little bit more information about what chains they plan to use. And of course, we have to go through this information because XRP is in fact one of the chains, but they're specifically mentioning Stellar, Sui, and Ethereum here too. So let's get into this brand new clip, as well as I have a ton of other additional information I want to give you. Let's jump into it. Happy New Year! All right.
She said Stellar, Sui, Ethereum.
To your point, there is not one chain that's going to be able to handle the volumes that we're looking at. So by definition, we will be looking at other chains, but they need to satisfy requirements that are going to make our regulators comfortable that there's nothing funny happening behind the scenes. And I think you get
compliance, KYC, AML built in. That's why Ripple is so focused on all of that stuff. That's what she's talking about here.
As I've seen the stories this week. So, we take great pain to ensure that from a legal and regulatory perspective, all these chains are above board. And what DTCC is working on is to, as we add these chains into our ecosystem, that we would have an orchestration layer that covers it, right? So if you tell me, all right, mint today on Canton, but tomorrow I need you to move it to Stellar or move it to, Sui or wherever we want to go, Ethereum, we'll be able to do that while maintaining the appropriate records.
She said Stellar, Sui, Ethereum.
This is mad confirmation that the DTCC is well aware of the same projects that we are locked into. Soy, Stellar.
That's crazy that she just named those off right now.
This is mad wild right now.
Mad wild, guys. It's mad wild. Love that. All right. DTCC is currently using permission enterprise DLT like the Canton network and R3 Corda via Project Ion in its core blockchain rails for settlement experiments, not public L1s like XRP as the primary settlement layer. What the DTCC is using today, Project Ion, built on R3 Corda and Enterprise DLT in live parallel production environment for U.S. equity settlement. Now, we've had a lot of conversation about R3 Corda and what their settlement assets are. It's XRP, it's XTC. I believe they're adding Solana and a few others to this. And so will XRP be the choice here? It does have a ton more liquidity than XTC. XTC is still in a gray area here in the United States without crypto regulation. And so you start to wonder, is XRP going to be selected here? Why don't they ever really talk about it though? It was interesting. I had never heard them just mention Stellar and Sui out loud there. It's really cool to hear it, but why don't you ever hear about XRP? Like it's kind of a strange phenomenon. Can they not speak about it? Are there NDAs and those types of things? It's hard to know. Designed for an alternative settlement platform, T+0, Trade plus zero same day settlement or Trade plus 1 day, that sits alongside DTC's existing systems and not on public chains. Canton Network has been selected as a blockchain infrastructure to tokenize a subset of DTC custodied U.S. treasuries and other securities. Canton is a privacy-enabled permission one by digital assets. Basically, the DTCC controls Canton. So in terms of L1 blockchains DTC connects to for settlement, the concrete name layers are Canton, R3 Corda, and others, and R3 Corda, an enterprise DLT platform rather than public chains like XRP, Ethereum. But she just said, Ethereum, which I don't know. I think some of this information, AI doesn't quite know. It's pulling from other posts that people put out, right? So it's not perfect. DTCC filed a patent for digital liquidity tokens that explicitly names XRP and Stellar. In this design, Ethereum is treated as one of the token issuance base layers while it act as an anchor network for cross-chain liquidity and settlement. So this is going to be where XRP and XLM come in to shine. They are going to be able to need to have like a bridge asset moving value in between networks, and this is what it's really designed for. Role of XRP in the model: XRP is positioned as a bridge asset, liquidity rail between networks, not as DTCC's main internal settlement ledger like Corda or Canton. The patent is architectural and forward-looking. It shows formal support for plan compatibility, but does not state that the DTCC's core equity or treasury settlement flows are currently running on the XRP ledger. Just want to make sure we're clear on that. It does talk about Canton R3 again, but we're not going to get into that too much. Introducing the Uphold Elite debit card where you can get 6% back in XRP anywhere you shop for the first 90 days. After that, you can still get 3% back. So if I'm buying something for Luna, or if I'm buying something for myself, or just getting some gas in my car, I can earn XRP back. You can also pair this elite card with Uphold's direct deposit and get up to 10% back in XRP. There's going to be some information down in the description if you want to apply through Uphold for this card and start earning XRP today. That's how I'm going to do it into 2026 to earn a little bit more and pack my bags. Let's get back to the video. I did want to play this clip because there's a lot of things said here. We played this a few weeks back, but maybe a week and a half ago, but it's really important.
So 2 years ago, actually last week was our 2-year anniversary when we joined DTCC, and we had been working on how do we extend what DTCC does into the digital, the DeFi world. That is really the vision that we have, is how do you bridge between TradFi and DeFi? And listen, there's a lot of people with very strong opinions of what depositories won't be needed in the future, that we don't want anything that's centralized, all that good stuff. And what we actually tried to do was show them that there's actually value to have organizations like DTCC really help with that process. Now, what happens in 5 or 10 years, I don't know. My guess is it will continue to evolve and we'll do what we do a bit differently. But you needed somebody right now to be able to do tokenization in a way that continued to protect investor protections. I'm sorry, that's probably two protections in one sentence, not a good thing. Really extend it with all the legal rights and obligations that go with it. And what a depository does, which is really important, Simon, is we are also the good control location. When you have an issuer like Apple, let's assume they issue 1,000 shares. How do you make sure after the 1,000 shares get tokenized and those get tokenized and those get tokenized that there's still fundamentally 1,000 shares? And that's really what the depository does, among other things that we do. So extending that into the digital world, I think it's also important to acknowledge that our hypotheses, and I think you'll agree with that, is while we believe that someday everything will tokenize, it is going to take us a while to get there. What we've tried to do at DTCC is really we're trying to take 55 years of evolving the U.S. capital markets, one of the largest capital markets in the world, and we're really trying to digitize that in a matter of like 50 weeks. There.
Listen to what she's saying here. They plan to do all of this in 2026. At least that's what I'm understanding from this clip.
What we've tried to do at DTCC is really we're trying to take 55 years of evolving the U.S. capital markets, one of the largest capital markets in the world, and we're really trying to digitize that in a matter of like 50 weeks. And then
they're going to digitize all of it in 50 weeks. Now, I don't know if they're going to be successful, but that's the plan that they are going forward with, to digitize it all in the next 50 weeks. 26 is going to be an incredible year for crypto, for blockchain, for regulation, for adoption, for corporates. They're all coming. 401ks, IRAs, trillions of dollars, billions of people are going to be using the market, and they probably won't even realize it. They just say, man, that payment was fast, and God, how cheap was that? Is that an error? People are going to be looking at their phone saying, I just got one, what does someone say when they, take advantage of a situation, but then they got one over on the bank, right? It was so cheap. I'm not going to tell the bank, right? They made a mistake. No, that's blockchain. That's crypto. That's value moving instantaneously. That's stable coins. All right. DTCC showed how traditional shares can be tokenized on public blockchains with instant synchronization to off-chain records. It is then executed on-chain, trading settled in USDC with T+0 speed, providing 24/7 markets are possible. USDC equals sufficient for local T+0. XRP is key to global multi-currency institutional grade scale. Let me play.
So what we're seeing here is the asset conversion. I see it here. You see it on the big screen. This is the DTCC asset conversion mechanism. You can see the various tabs on the top: BNY, Euroclear, Canton, Finality. As long as the other party has a FIN P2P router, we can add more and more of those. So it's very easy to convert between any ledger to any other ledger. Specifically here, we're focusing on the DTCC traditional ledger, which is an Apple share that was bought in the market, and now we want to convert it from off-chain to on-chain, and you can see that actually really before cool. We had a view of how much it had the user had before on-chain and off-chain. So now we're going to convert 400 shares from traditional to, remember we started here with 600 on-chain.
Look how quick it is.
So we're supposed to finish with 1,000 on-chain.
There it is.
And now you can see you have 1,000 on-chain, you have 400 less on the traditional ledger, and the total remains exactly the same.
So this is how they're going to do it, right? They're going to start tokenizing and bringing it over. And just like any stock, right? It's going to be instantaneous. Within a few seconds, it'll go from the legacy world onto the blockchain rails, onto the new rails. They're going to do everything in the next 50 weeks. This is getting really exciting.
You have 400 less on the traditional ledger, and the total remains exactly the same. So these are just two ways for DTCC to hold the asset. It can be in the traditional ledger, it can be the digital ledger. For all intended purposes, it's the same, only the digital ledger has all the advantages of instant settlement.
So behind the scenes, what's happening in this conversion flow is the value is actually moving from the DTC custody, the participant's DTC custody account to a control account. The tokens are then being issued and delivered. So what the party is actually holding is a digital twin against that DTC holding.
We're moving on to the next demonstration, which is basically for the client that actually received the asset in digital form is now putting on an offer to sell it to the next client. So now he's trying to sell 1,000 shares of Apple. We're doing something interesting here. The payment mechanism is a stable coin. So we're going to show a traditional asset moved to digital asset on the platform, and you can see now that the client published an indication of interest to sell 1,000 shares for 200 shares each. Okay? Now we can go to another client, and that other client is basically wanting to buy the asset. They can see that the asset is available for sale. So I'm going to click, they're going to click the buy button to buy the asset, choose Circle as a payment mechanism, and execute the trade. What's happening now is basically a DVP between the share on DTCC and Circle being paid online. You can see there's something called an execution plan that starts with holding the asset for the DVP at the DTCC side. Then there's going to be a transfer of the cash on the public ledger from the buyer to the seller, and when this is done, we're going to see the release of the asset to the new holder. And you can see that it's now finished. If you now went to to Ethereum, we'll probably see the trades happening there. So this is a process, and when this is done, you will see basically a settlement within 2 or 3 seconds of a trade of Apple after hours. So here it is. We achieved a use case of 24/7 trading with instant settlement, and the transaction is done.
Release the funds. Let's go. All right, it looks like we are working towards another day here, 13.55 million middle of the day. Looks like we ended 2025 with 27.63 million in ETF volume today, guys. Franklin Templeton and Canary leading the way. Look at this, another 8.9 million, another 6.8 million. This locks up another 13 to 14 million XRP into ETFs. We're closing in on $1.5 billion. We'll reach that probably by the end of next week. Analysts are framing 2026 as crypto's institutional era, with big calls around ETF-driven flow, stablecoins going mainstream, and tokenization, and a sharp split between regulated blue chips and everything else. Price forecasts are up all over the map, but most major shops agree that the market structure, not memes, will drive the next phase. Grayscale's 2026 Digital Asset Outlook explicitly labels 2026 as the dawn of the institutional era, expecting more assets offered via ETPs and large share of advertised wealth flowing into crypto. Bitwise forecasts ETFs in 2026 will buy more than 100% of the new supply of Bitcoin, Ethereum, and Solana as institutional demand accelerates. Like how Bitwise always tends to leave out XRP from their whatever, right? This is from pulling from Bitwise Investments itself. And I don't know what it is about Bitwise specifically and why they don't like to mention XRP as much. It is just like Matthew Hogan. It is painful for him to talk about XRP openly. Usually when he's invited on a lot of podcasts, he's talking about Solana, he's talking about Ethereum. I get it, but I'd love to have you guys, open your arms to the XRP community. We are good people. And you take our money with your ETF. So Please. Coinbase Institution says 2026 will be defined by market structure, perpetual futures, dominating price discovery, and structural leverage reset shifting market forward toward professional flows. Of course, we are going to see what's going to happen. I'm working on a full prediction video. You're going to see that the same day this video comes out. So if you haven't seen the prediction video, we're going to go through Ripple and XRP predictions all over the world. It's going to be a lot of fun. We're going to get into it. All right, guys, Happy New Year. I hope you're having a fantastic one so far. 2026 is going to be an incredible year to grow and learn together. If you got any value, please like, please share, leave a comment down below. I'll see you next time. Aloha.